Guys, how you doing? Yeah, we're looking over these AIG losses that have just been reported, and it looks like, well, listen, the loss is $3.09 a share. I'm not going to go out on the limb and say that that's comparable to a 76-cent a share loss estimate, but you never know, as they say, when these things cross, because it very well may be the way these things have been going for this company. But the way, it's a very complicated, as you guys know, it's very complicated anytime you're talking about a company that has as many issues as AIG in terms of the financials of it, in terms of comparing a net loss of $3.09, which we're seeing here, is a huge, huge loss. That's, just to put it in perspective, in dollar terms, you're talking about losing almost $8 billion in a single quarter, $7.81 billion in a single quarter. They lost $4 billion at this time, or I should say they made $4 billion the same time a year ago. So they're losing almost $8 billion. They lost $5 billion the quarter before that. AIG has been in trouble for some time. Again, the street was looking for a loss of 76 cents. Whether $3 plus is comparable to 76 cents, we'll have to look forward. We'll have to look through the release in more detail. The revenue coming in here looks like first quarter revenue is $14 billion. If that's right, and I have no reason to think it wouldn't be, that's about half the estimate. I mean, the estimate was for more than $30 billion. They're looking for $31 billion in revenue, and instead they got 14, so that's nowhere close. And the loss looks like it's a lot wider than expected. But guys, give me a few minutes to
all right. Why
look through the details on it. But this is a pretty big, this is a huge loss.
Connell, thank you for that.
In the meantime, the after hours trading doesn't show much of a loss. We are it's closed at 44.15. I'm showing 44.10 right now. Again, one would expect a little more downward pressure. Connell is going to be analyzing the figures, but from what you've seen so far, Gary Kaltbaum, what would you say about AIG?
Same old, same old. The company's got problems. We're hearing things that we should have heard 9 months ago. I think they said 3 months ago we're getting close to the end, and boom, here comes another one. By the way, I think the stock has stopped trading in the aftermarket.
I believe it has. I don't have the stop notice on my my system here, but I believe it has, because one would expect some movement, and we see 44.10 right now. Again, it's only 5 cents less than the close, and with information like this, perhaps they have stopped. We're going to be checking up on that as well.
But Neil, help me out. Help us put this in context. This is coming on the heels of a record loss, $11 billion. And what we got to return to time and again, what you're seeing in the financial sector, what you're seeing in the insurance companies, are these fair market accounting rules. I know it's geeky stuff, but it is roiling the stock market. In other words, these companies cannot go into the markets and get a price tag on these illiquid securities because no one wants to buy them. In other words, the rules say that you have to take a write down. In other words, based on what the market will prevail in terms of a price. And I'll offer it up to the panel. Should the SEC rather suspend or do an average rolling 6-month price for these illiquid securities, or do you still have them? Because AIG's chairman and CEO is saying if those fair market rules were not in place, it would only have taken a $900 million hit, not the $11 billion that it suffered. It's an interesting debate.
Peter, go ahead.
No, why should we just pretend that the losses don't exist? I mean, that doesn't make any sense whatsoever. In fact, if anything, they're probably not writing these assets down enough.
Neil, let me ask you something. The debate really is that some of these assets do still have cash flow behind them. Isn't that what you're hearing in the banking
Absolutely true.
world?
And how do you mark the market when there is no market? So you have to go back to the days of commercial lending and apply some of those rules as to what the discounted cash flows will be, and don't look for a market.
Todd Wildman, I saw you looking off to your computer screen. Are you seeing anything about AIG right now?
No, it's still halted trading.
Yeah, I think it's still stopped. Go ahead.
But a lot of those cash suspend the mark-to-market for at least a year. Suspend the mark-to-market. I mean, that just came about. That was Rule FASB 157. That just came about 6 months ago. Let's rescind it for a year and get through this financial crisis.
Wait. So hang on. Let's get back to what Todd's saying. Hang on. Again, AIG is reporting a deeper loss, double than what analysts expected on an earnings per share basis. Todd, you're saying that they should suspend these rules for a year. Is that what you're saying?
Right.
And you're saying basically
they have not suffered the loss yet. There's no cash loss yet. I mean, there's assets backing.
So you're saying these are
obviously the assets are lower, but let's wait. I mean, people are talking about what's going to happen is in 5 years the assets are going to be worth more, and people are going to be adding it back to their balance.
Remember, that's how those Bear Stearns.
Hold on, whoa, one at a time, guys. Let's get some order here. Peter Schiff, go ahead.
Well, that's exactly what the hedge funds were doing before they blew up. They were marking these assets to myth. They were pretending they were worth more than they were. And the problem is when people want their money back, then you find out what they're really worth. You can't tell the shareholders and pretend that you have assets on the books that are worth something when you know they're not.
Gary, you know, Peter raises a good point. In other words, that these rules allowed these banks and brokerages and these hedge funds, although they're not publicly traded, to report record profits. In other words, they were marking and an upside. A lot of these assets enjoying a very sweet upside to earnings. What do you say to that?
They got away with it for years, and they took billions of dollars worth of fees. I got to tell you, 20 miles from here is Fantasyland in Disney World. That's where they were marking their prices. There should be full and fair disclosure. That is what my business is about, of managing money.
Hang on a second. So, in other words, on the upside and on the downside, in fairness, I think you should maybe suspend the rules going forward so you get some more evenness in there. In other words, do a rolling average instead of allowing these outsized profits and these outside losses as well. What do you think?
For me, a loss is a loss is a loss. And they should take them if they have them, and do not change the rules in midstream.
Guys, hold on 1 second. We got Connell McShane with some more information on AIG. Go ahead, Connell.
A couple of things here, Dave. I mean, well, number one is the amount of as a lot of these financial-related firms are doing. The AIG is looking to go out and raise more money, and they're looking like they want to raise capital to the tune of, it looks like about $7.5 billion in a stock offering to try to raise capital. Now, another interesting thing that we noticed here was that they're going to boost their dividend, which kind of seems strange, you know, when you consider the environment and what else they had to say here. You guys were talking about the losses. You see at the bottom of your screen now, comparable number, $1.41 a share versus that estimate of 76 cents. So they're obviously losing, as Liz said a moment ago, double what the street expected. But also, and I guess this is what a lot of the firms are trying to do: go out in the market and raise more money because they need it. And it looks like at least $7.5 billion in a stock offering that they're going to raise here, and some more in debt as well. So $7.5 billion that the AIG obviously, guys, needs the money, and that's what they're trying to do here through this stock offering.
All right. Well, Connell McShane is on the story of AIG. He's going to tell us as soon as, by the way, the stock, I believe, is still halted. Well, it looks like it's moving a little now, Connell McShane. It's going down about just a couple of pennies. So at least there does appear to be some after-hours movement in that stock. We're going to be following that very closely. It stopped at 44.15. Looks like it's trading now at about 44.06. As soon as we get more information, we'll report.